Hello everyone, a very good morning, good afternoon and good evening to all. Myself Vaibhav. I welcome all of you to today's session of Visual JForex in which we will be starting afresh with a new indicator. The name of the indicator is Zigzag, and as you can guess from the name, this indicator is derived using the swing high and swing lows values. Whenever there is substantial move in the underlying instrument, we get this formation which we can utilize to look for the optimum trade entries. So let us now go to the Visual JForex board which has been developed by the Dukascopy Bank SA. You will find this indicator listed amongst the other indicators just at the bottom, Zigzag. We have to define these 6 input parameters depending on which we get this output value, the zigzag line. And in this session, we will not go into the technical aspects of it, how it is derived, how these values are taken into consideration to arrive at this output value. We will not go into that. For that, you will have to refer to the earlier session, the introductory series I had done. There you will find more details. Now this time around we will be focusing more on the functional aspects of it, how we can look for the trade entries using these output value, and mostly we will be working with the default values here. You can change the shift value to 1. Apart from that, I think these values of extend, depth, deviation and backstep we will let it remain as it is. Shift value I will make it to 1, and we will be working with the hourly time frame, so I will change this candle period to hourly. Okay, I will explain to you what the logic is going to be. We are taking into consideration any sharp move in the underlying instrument where we see new swing high or new swing low being formed, and after that this line, zigzag line, gets formed. Only after substantial move you will see the last hourly candle having the zigzag output value. It is not going to happen every hour. So as you can see, it's been 6 hours since we had this zigzag output value, so that you have to bear in mind that there won't be new zigzag values every hour. Only when there is new swing high or swing low form and then reversal from those levels, we will have this output value. And from the chart you can deduct that whenever we see sharp move in a direction opposite to the prior move, we can look for new entries with the expectations of the possible reversal from the prior trend. So when we see new zigzag output high being formed, we can start looking for entries to go short in the underlying instrument, and when we see zigzag output low being formed, we can start looking for buy trade provided there has been substantial move, and after that it should hold well for at least significant amount of time. So these two aspects needs to be considered, that there should be strong enough reversal and after that it should hold at least for hour or two. So that will ensure that we are not getting involved after every sharp move, and only the move which is sustained for required amount of time, that is the only move we will be targeting. So the simple setup is as follows. We will consider the output value of the zigzag for last hour if it is there. So as I said earlier also, not every hour there will be new output. So if we take this recent example, here we have the zigzag output for this hour which closed at 13 GMT, which started at 13 GMT, and here we consider next hour's closing value. It should be showing reversal, but this reversal should be more than the gains in the prior hour, and only in that scenario we will start looking for optimum entries, and that is not really the case. But if we consider this hour here, after this formation of the zigzag output value, we did have substantial move on the higher side, and to make sure it was sustained and we don't end up getting buy on too much high side, we will also consider whatever were the losses in the prior hourly candle, so that we will deduct from the last tick price and we will place the order on the lower side for say order validity of 2 hours. So we will do all these things to make sure that we don't end up trading in environment where the volatility is damn too high. Okay, so this is for the buy as well as for the sell. The formation is quite simple. Now let us head back to the Visual JForex board, and here we have to start from the start with the first thing is to get the instrument subscription done. For that, we take into consideration the logical blocks, the block. All right, we will use on candle as the start point. So here we have default variable, default instrument, and after that we take candle instrument, and candle instrument should match the instrument of choice, which is going to be Euro USD. Here it is. Now with this we have to consider the position amount. There should not be any existing open or pending position on the account prior to the opening of new trade. To make sure that is the case, I will add second input as the 0. First input should be equal to 0. We have this zigzag block with the time frame of hourly candle period, and these values are as per the default setup with the look back period of 1. After that I will get in the get historical candle. We are going to need two of these. As I see it, we need to make a zigzag look back period of 2, not 1, as we will be having this historical candle with the look back period of 1. So that will be the last hourly candle close, and we need this zigzag output value for the second last hourly candle close. So I need to make changes here. Here I will change this to hourly with the look back period of 1. And another one will be added with the look back period of 2. Candle period is going to be hourly. All right. Then to pinpoint the exact entry point, we will take the help of 10-second candle blocks. Oh, this needs to be of 10 seconds with the look back period of 1 and 2 respectively. All right. After that, we will also get the calculation done to look at the actual difference between the closing and opening values of candle 17 and candle 18 respectively. So for that, we are going to need mathematical component. So we have this hourly formation in place. Now I will take the difference into account. So for that, we need the closing and opening values here. So I will take candle 17 is candle open and close price. Uh, 5 minutes. Sorry. Now we will get this done. Yeah. So here we get this calculation done. Last hours open price and close price difference. We will have to calculate it both ways. One will be needed when we will be looking for buy trade, and another time we will need to reverse it. So we get the calculation done in both the scenarios. A1 minus A2, and here also one and the same thing, A1 minus A2. So I will name it SSD, and this one we will name BSD. So we have these two new variables which we will utilize to retrieve the actual difference between the last hour's opening and closing prices when we will be looking for buy as well as for the sale trade. So with this, we stop here for the day, and in next session, I will explain to you how we can set the conditions for the execution of the trade when we feel that this is the opportune time to go long for the underlying instrument. So do come back next time around. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there. For carrying out the testing on the historical data, you will need the help of JForex platform. So all these links have been provided in the bio. Thank you all for joining in. See you next time around. Till then, goodbye.